But before we talk about how we're going to distribute it, let's just talk a minute about what kinds of money we are collecting. We know that we're collecting real and personal property that is locally assessed and real and personal property that is centrally assessed. We're collecting uniform fees in lieu of property tax, which is your age-based fees, your uniform, all of your uniform fees on motor homes, on boats, ATVs. Oh, help me out here. There's airplanes, lots of, all of the uniform fee in lieu of taxes. We're collecting penalty and interest, and we're collecting other money, such as money that you collect through a tax sale, money that you collect that is prepayments of taxes. Some people pay their taxes, property tax, in advance. We're going to collect any rollback on the farmland assessment, the FAA money. We don't have time to talk about FAA assessment today, but the rollback money is money that has to be paid for the previous 5 years if you take property out of agricultural production, or you're moving it from agricultural production to some other kind of use. There's that rollback that's due, and it's a 5-year rollback. That's money we collect. Can you think of any other monies that we're collecting in terms of property tax? There's a lot out there. Tax sale money. You know, you're going to collect money through tax sales. So the treasurer will distribute the money generally on the 10th of each month, and they distribute it to the taxing entities. Now, the law allows special arrangements to be made. A taxing entity may not want it every month. They may want it just quarterly, and that's provided by statute. They can do that. There's a final settlement every year, and that settlement occurs on March 31st. And I should have asked this question after lunch, who's involved in that final settlement? Almost all of the property tax players are involved in that final settlements. And you better believe the taxing entities are going to be there, you know, wanting you to defend the money that you've distributed to them, because they want all the money they're entitled to. And on the final settlement, these types of things are adjusted for. We just won't go into those, but because I think they're self-explanatory. But now we're going to get into distribution. In order to get into distribution, we need to talk about taxing entities and tax areas. Now, a taxing entity, the key phrase there is taxing entities have the authority to levy a tax. That's the key phrase for taxing entities. A tax area is created by overlapping boundaries of one or more taxing entities. Now, Dave talked about that in his presentation on tax rates, but I have just a little different angle on it, and we'll go over it again because it's important, and it's very important when it comes to distribution. We have a rectangular county, and we've truncated the tax rate. In most cases, the tax rate is a decimal point followed by 6 digits. But in this case, we've shortened it to 4 digits. The county's tax rate is 0.002. The school district's rate is 0.005. And those tax rates apply to the entire county, both the county tax rate and the school district to the county boundaries. Then we're going to add a city, and that has a tax rate of 0.002. Now we have 2 tax areas. We have 3 entities. We have a county, school district, and the city, but only 2 tax areas. Okay, we'll add another taxing entity. So how many entities do we have now? 4. How many tax areas? How many? 4. This magenta area right in here is the 4th tax area. Does everybody see that? Understand it? Okay. Then this is the kaleidoscope. We add another taxing entity, and now we have 8 tax areas. Before I go on, does everybody understand this? Okay. Now what I need you to do, and you don't even need your reading glasses, go to this chart in your manuals. Now taxes, property tax is going to be distributed on a simple percentage basis. And this is how it works. Take tax area 1. You've got the county and the school tax rates. And you see right below the first row a 29% and a 71%. Okay, if you have $100, you're going to distribute $29 to the county and $71 to the school district. Okay, now I'm going to ask you a question and you tell me the answer. We have $1,000 to distribute, and it's going to be in tax area 8. We need to distribute that money in this area right here. Tell me how much the county is going to get of the $1,000. Very good. How about the school? City? Okay, I think you have it. Does everyone understand that? Okay. And this is particularly important when you get to the uniform fees, because you don't have a tax rate involved with those uniform fees, do you? Can't distribute it by tax rate because it's a uniform fee. And also with your tax sale money, you don't have a tax rate for that. So this is the way those monies are distributed. Okay, that airplane's just having a very, very difficult time getting through the arch. And this is to illustrate how important boundaries are. Taxing entity boundaries and tax area boundaries. And we're going to talk just a little bit about that. Okay, government boundary changes. Government boundaries include all of those, the county, municipality, your school districts, all of your districts, all of your taxing districts have a boundary. And they can create, a new taxing entity can be created, it can be dissolved, it can be just amended or modified or numerous other things. So in 2009, it was very complicated as to how those boundaries were changed. Every taxing, I shouldn't say every taxing, let's say mosquito abatements had their own, districts had their own procedures for changing boundaries. Water districts had their own procedures. Well, the legislature said, this is crazy. Let's just make one standard procedure for every taxing entity that's involved with a boundary to follow so that we get this all worked out. It was becoming too complicated. And so this is what they came up with. Here's your taxing entity making the boundary change. The first thing they need to do is go to the county surveyor. The county surveyor needs to make sure the property description is correct, that the boundaries are correct, and that there's a plat map. Once that is completed, then gives it back to the entity making the boundary change, and then at this point, we advise the entity to notify the county recorder down here. because the county recorder is key in this process, and they need time to go over the documents, over the plat maps, and to make sure everything's lined up correctly, and it takes time to record the boundary change. In addition to giving the documents to the county recorder, the entity will supply the Lieutenant Governor's office all of the documents. The Lieutenant Governor's office acts as a state clearinghouse for boundaries, and they work with the GIS people to make sure that, to double check, to make sure everything is correct, because if these boundaries aren't correct, then your values apportioned to the taxing area or the taxing entity is not correct, and they will not get the proper money. So this process is critical. So the Lieutenant Governor goes through these actions, and they check it all, and then they will issue a certificate. The certificate goes back to the entity here, and then after the entity receives the certificate, they send it over to the county recorder. Now, a boundary is not official until it is recorded by the county recorder. So the county recorder is very key in this process. And once the county recorder records that boundary change, then they notify the State Tax Commission, they notify us, and we make those adjustments for the boundaries for the entity and area, or the county, or wherever that boundary change is. We make those adjustments on our system. Now, the Lieutenant Governor also is to send the certificate to all of those people listed on the right-hand side of the chart. And because we're running short on time, I have several slides that follow this process all the way through. They give you time frames, they give you the documents that need to be submitted. So I'm not going to take time to go through those slides. I think they're self-explanatory, and I put them in that way because, you know, it's kind of mundane to go through time frames and documents. So you can read through those. And I will just click right through them. Now,
you need to slow down past those funny ones.
oh. I'm sorry. They're good for a laugh, but you don't really learn very much with them. In summary, this is the best I can do for a summary on distribution. And it's taxes are levied and distributed to taxing entities. They are billed and collected by tax area. Let's say that together on three. 1, 2, 3. Taxes are levied and distributed by taxing, or to taxing entities. Taxes are billed and collected by tax area.